So I'm going to say this really slowly so that anybody who is brand new will easily understand. Technical analysis is the study of historic price movements in order to make accurate decisions of what the market may do next. Technical analysis is how we make those accurate decisions of what price may do next. Every part of technical analysis is based around price. Think about a candlestick chart. That's just a visual representation of price itself. Trends are nothing more than higher highs and higher lows, or lower lows and lower highs in price. Structure, support, and resistance, even indicators, are based around price. They're just a formula added to historic price data in order to plot that indicator on your chart. So because of the fact that the foundation of all technical analysis is price, the very first thing we're going to study today is a candlestick chart. And I'm going to put a timestamp beside me of the 7 or 8 things we're going to be going over in today's video. That way you can skip ahead if you already know parts of technical analysis. With that said, let's go ahead and dive into candlestick charts. What you see on the screen in front of you is known as a candlestick chart. Right now, we are on a daily chart of the S&P 500. I'm going to go to a price chart of Bitcoin. Now we are on the daily chart of Bitcoin. And now let's go to a candlestick chart of the euro dollar. Now, what do you notice about all three of these? They all have candlestick charts. So the foundation of technical analysis, no matter what market you're trading in, whether that be Forex, stocks, crypto, the foundation of technical analysis in every market are these candlestick charts. But before we can understand this full candlestick chart, first you need to understand what a single candlestick represents. So let's do that now. Here are a couple of single candles. And what these candles represent is price movement throughout a certain period of time, depending on the time frame that you're on. I'm sure you've all heard of time frames, right? The daily chart, the 1-hour chart, the 5-minute chart. Depending on what time frame you're on, that's the amount of price movement these candles represent. So let's consider that we are on a 5-minute chart. That means that each of these candlesticks would represent 5 minutes of price movement. Now, before I get ahead of myself, candles have two parts. Candlesticks have a body, which you can see here, colored in green, and a wick, which are the lines above and below the body of the candle. A green candle represents a 5-minute period, since we're on a 5-minute chart, right? A 5-minute period where price went up or closed above where it opened. We're going over that in just a second. A red candle has a body as well, but the body of this candle is red because it represents a 5-minute period where price closed below or went lower during that 5 minutes. To make this really simple, let me go ahead and explain the open, high, low, and close. The open of a candle is where it opened during that 5-minute period. So let's say that the beginning of our candle is at 12 o'clock. What this candle would represent is the open of a candle at 12 o'clock. The low would be the lowest point price got to during a 5-minute period. The high would be the highest point price got to during a 5-minute period. And our close would happen at 12:05. And that would be the ending price during a 5-minute period. So that is a green candle. A red candle represents when price went down during that period of time. So for a red candle, we would have an open at the top of the body. This is the only difference between the two candles. The open is at the top of the body of a red candle because during a red candle, it represents a period where price closed below where it opened or went lower during, let's say, a 5-minute chart. So the open is there. The highest point is the same. It's the top of the line or wick of the candle. That's the highest point price got to within 5 minutes. The low is the lowest wick on that candle. That's the lowest point price got to in 5 minutes. And the close is the closing price after 5 minutes of data on a 5-minute chart. Again, if we started this at 12 o'clock, then the closing price would be at 12:05. And this candle shows you all of price between, all of the action of price between 12 and 12:05 if you're on a 5-minute chart. If we're on any other time frame, everything is exactly the same except for the amount of time that passes. If you're on a 1-hour chart, then this would be the open at 12 o'clock and the close of this candle would be at 1 o'clock. Everything else stays the same. The low is the lowest point that candle got to during that hour. The high is the highest point that candle got to during that hour. So at this point, you should know exactly what each and every candle represents, and we put a large amount of these candles together in order to interpret what price is likely to do next by identifying trends and areas of value, identifying entry patterns, which is all stuff that we're going to go over right now. So let's dive down to a chart, take a look at a couple of live examples of single candles, and talk a little more about trend, areas of value, and the way we can use candlestick charts to predict what the market may do next with a high degree of accuracy. Just as a quick look at candles on an actual chart, we are currently on the 1-day chart of the Euro New Zealand. So what do each of these candlesticks represent? They represent 24 hours of price movement, or 1 day of price movement. A green candle represents a day where price went higher, or a day where the price closed above where it opened, right? A red candle represents a day when price went lower, or a day where price closed below where it opened. This most recent green candle, what does it represent? It represents price opening right here at the beginning of the day. The lowest price that price got to is the bottom of this wick. The highest price that price made during that 24-hour period is the top of the wick right here. And the close of that day is the top of the body of that candle. The opposite is true for a red candle. So now that we have that, let's move on to how we can use a large amount of these candles in order to identify a trending market and make accurate trading decisions. So if you had to take a guess of what trend the Euro New Zealand was in, which is the chart that is in front of you, what would you say? Uptrend, downtrend, or consolidation? Hopefully you were able to say an uptrend. And simply put, an uptrend is nothing more than when a candlestick chart is consistently making new highs and then higher lows, followed by new higher highs, new higher lows, new higher highs, new higher lows, new higher highs, new higher lows, and so forth. This higher high and higher lows situation is what is referred to as a trending market. In this particular situation would be an uptrend. Now, the reason we utilize a trending market is because it gives us more accuracy on our trades. You've probably heard follow the trend before, and most beginners will gravitate towards trend trading for good reason. Again, it adds accuracy to your trades. It can make for better reward to risk setups. And all in all, it's much easier to ride a trend that's already there than to pick the very top or the very bottom of a market trying to trade reversals. So it's a good thing to trade with the trend. With this market being in an uptrend, what direction would you like to trade this market? To the upside, right? You'd want to be buying while the market is in an uptrend. But here's the problem with trend identification that I see all the time, and that is just not really understanding or having a set in stone, objective, defined way to identify trend. A lot of traders can easily identify this, right? That's an easy trend to see. But what if price is acting like price normally does, and it looks more like this? We have our high to low, a new high, but then price does this, and then finally goes up, and then goes up again. At this point, doesn't it get a little bit harder to identify trend? So with that being the case, I want to give you an objective way to identify trend right now. What we have in a trending market